Okay guys, welcome to Forex Success. Okay, so in this video guys, I'm going to be showing you how you can catch spike trading crash and boom. Look, this is a very typical example to show you how to catch spike. I'll show you how to set this indicator, but firstly let me explain the spike. Firstly, I know I didn't catch the spike because I was just a second late for this. Now, I saw this move, that is the red moving average. It crossed below this green line at the oversold level, which indicates a spike. So as it just crossed below, I was supposed to take a buy right here and then to catch this spike. Yeah, so you can see it's an invisible spike. It's an invisible spike. So I was supposed to catch the spike, but I didn't catch it. This is what I want to explain to you. Once you see that, it is clearly advisable that you should just go on a higher time frame and look out for any key level that might alter this spike, that might make this spike to happen really fast. So then I went to my 30-minute time frame just now. The chart, the price was right here. You can see the price was right here, and I can see a support level right here. So I'm just going to mark out this support level. Guys, what I'm doing right now is what you guys should do. That is combining the price action and this indicator strategy to bring forth better results using the spike catching strategy. So this is another key level that we'll be expecting a spike from, and thirdly, this is another level right here. This is another level that we'll be expecting spike from. So back to the 1 minute time frame. So okay, let me explain this from the 30-minute time frame, guys. The spike also happened right here. You can see, so this is the level. Number one confirmation is that the price is moving closer to a key level that we should be expecting a spike from. And then the second condition is that the second confirmation is that from the 1 minute time frame, I can see is the red moving average has crossed below this chart, below the green line at the oversold level. So that gives me a reason to place a buy to catch spike. So that's just basically how we do this. So before I continue to show you more on how to use this strategy, I will just show you the indicators for those of you that don't know how to set the indicators. So we just need 3 indicators for this strategy. Firstly, you need an average directional movement index, which you're going to set on period 50. Then the levels, you're going to put it on 0, 5, 10, 20, 35, 0, and 0. You see the star, you use the color of your screen. The positive DI, you can use the green color. Negative DI, the color of your screen as well. So you take a screenshot, please, so you can set this after watching this video. Done. So the next indicator is the commodity China index. So the period is 14 applied to typical price. Then levels negative 100 and positive 100. Then use this color as well. Done. That's it. Last indicator is a moving average, which you should set on period 10. Shift 0 method, simple, apply to close. Levels, you ignore the levels, you doesn't need level. Then the star is 4 peaks there, while you use the color red. Done. So once you set those indicators like this, your screen should be like mine. So once your screen is like this is what you should watch out for. That is after you've gone to the higher time frame, like 30-50-minute time frame, even on 1 hour time frame, to spot out key levels, that is support and resistance level. This is what you should watch out for to use this indicator. When this red moving average crosses below this green line at the oversold level, that is below this 10 level, below this 10 zone, you see it indicates that a spike is expected to occur. So once it crosses below, you place a buy. Exactly. So you can see many situations where this happened, right? As it crossed below, it spikes to the upside. Very nice strategy, guys, to make money. You see that? Very nice strategy. So if eventually, like, it takes like maybe when the conditions are met, and then it takes it's gonna give you a spike even if it's a baby spike. So sometimes it might take too long to happen, but just know what you are risking. Like me, guys, I always say I risk nothing more than 9 candles. So if after 9 candles I don't get that spike, I'm gonna close the trade. You get that? And wait for another good confirmations. But guys, if you look spot at your support and resistance level, that is those key levels that will be expecting spike from, guys, you are going to hardly close a trade on loss using this strategy. So that's basically what it is for now. And then let's see on what's it called, on boom 1000 index. I'm just looking for a way to catch spike. Okay, we're on boom 1000 index before. Boom 500 index. So boom 500 is not giving me a clear reason to place any trade using the strategy. Then I check on crash 1000 index. Crash 1000 index just got a spike. So I'm not getting any good reason to enter any trade right now. I wanted to just catch spike right on this video so that you guys can see me doing this live on this video, so you can also do it on your own. But guys, I believe you all understand my explanation. Yeah, I believe every one of you understand what I explained on using this strategy. It's a very nice strategy, guys. You use it to buy boom and to sell crash. Exactly. So if you are the type you want to sell boom and buy crash, this strategy is definitely not for it. You can use another strategy, but this is what this works for: crash and boom, crash and boom. So we are on boom 500 index, boom 1000 index, which we used to did the main explanation on this video. For the 1 hour time frame, just like on my screen here, this is a strong support zone. So we're not expecting this market. So that's why, this is why, guys, you'll be expecting this retracement that is giving you that spike at such key levels. You get that, guys? You just catch your spike if you are very sure, or if your price action analysis states that you're gonna get another spike, then you can hold the trade and wait for another spike. So that's basically how this thing works, guys. Take for instance, the price is moving at this level, let's say from this one, guys, and then you already mark this out as a resistance level. Let me do that right now. So this is a resistance level, right? Yeah, because price reacted to it before right here. And then take for instance, price is coming right here just now. So, and you see your conditions are met, that is the red moving average is above the green one. You should be boldly place a sell right here, expecting, okay, sorry, we're gonna be using, since we are buying boom, we're gonna be using the downside. We have no business with resistance level unless the resistance has turned support. So we're actually looking at the downside. So you can see, guys, at this one, this is a support level that will mark that. So when the price came from this side to the downside, it is clearly understandable that you can place a buy right here. So you see price reacted to this same zone and then move to the upside, and then your strategy is going to be confirmed from the 1 minute time frame as well. So these key levels helps you to be so sure and expect that it's going to retrace. It's just like, okay, take for instance on let's see this on step index. Good. I'm just going to reduce this down to 50-minute time frame. Usually, guys, everyone knows that when a price gets to a support or resistance level, it's either break or bounce. And most times, 90% of times, guys, the price retrace, the price reacts. That is, it spends time, like it just makes some little bit of consolidation around that support and or resistance zone before it either breaks or bounce. That is why we are taking advantage of that to catch spike. That is just the reason for it. So that is just the clear explanation for this. Take for instance, you can clearly mark this point out as a support level, and then price came right here. You should be expecting to catch a spike from there. Even if it's gonna break through, it's just gonna make some candles back, then break, right? So if it's for crash and boom, you're gonna be able to catch some nice spikes right at that point. So that's just basically how it is. Thanks for watching, guys. This is Forex Success, and we are trading on synthetic indices. You can see where we'll find crash and boom. The link to create an account is at the description below and also at the comment section of this video. So click on the link to get your account ready and start trading. Follow our Telegram group and make sure you subscribe to this YouTube channel so you can get more videos.